Happy Wednesday, everybody. Welcome to another episode of Market Update, where we discuss leading financial and economic developments in Europe, Asia, and North America. My name is Tony. Let's jump in. And first up, US President Donald Trump has announced a sweeping new trade agreement with Japan, touting it as the, quote, largest trade deal in history, end quote, and a major win for the American economy. Speaking at the White House on yesterday, the US President said the deal would set a 15% tariff on Japanese imports and secure a $550 billion investment, over $500 billion investment into the US from its key Pacific ally. Quote, I just signed the largest trade deal in history, I think maybe the largest deal in history, with Japan, end quote, Trump said during a media event shortly after revealing the pact on his Truth Social platform. He added that the agreement had been the result of lengthy and detailed negotiations with top Japanese officials. While full details remain pending, Trump said the deal would see Japan open its market to more US agricultural products, including rice, and eliminate some long-standing barriers to American automobile exports. He emphasized the significance of reducing Japan's sizable trade surplus with the US, approximately 80% of which comes from cars and auto parts. The news triggered a rally in global financial markets. Japan's Nikkei 225 surged 3.2%, led by gains in auto stocks, including an 11% jump for Toyota Motor Corp. The broader MSCI Global Stock Index extended its annual gain to 11%, buoyed by optimism that the US-Japan Accord might ease global trade tensions. S&P 500 futures ticked up 0.2%. Japanese public broadcaster NHK reported that Washington would lower its auto tariffs to 15%, down from Trump's previously threatened 25%, citing unnamed government sources. Shares of Japanese car makers surged on the news, reinforcing investor optimism about improved market access and supply chain stability. Japanese Prime Minister Shigeru Ishiba, whose government recently lost its majority in the upper house, described the deal as a product of intense negotiations. Quote, Japan and the US have been conducting close negotiations with our national interests on the line, end quote, he said at a press conference in Tokyo, adding, quote, the two nations will continue to work together to create jobs and good products, end quote. The agreement also includes plans for a joint US-Japan liquefied natural gas LNG export project based in Alaska, Trump said, though further details have not been disclosed. White House officials have yet to release the full terms of the agreement, including whether Japanese auto imports will receive any exemptions from other tariffs. Past trade announcements by the Trump administration have often been followed by weeks of clarification as details are finalized. The announcement comes just days before Trump's self-imposed 1st of August deadline for enacting what he calls reciprocal tariffs on dozens of US trading partners. Earlier Tuesday, he also announced a separate deal with the Philippines, imposing a 19% tariff on the country's exports. Quote, the Philippines is going to open the market with the United States and zero tariffs. The Philippines will pay a 19% tariff. In addition, we will work together militarily, end quote, Trump wrote on social media soon after the announcement. The US president had previously pushed Japan to recognize vehicles built to US federal motor safety standards and grant exemptions from the existing 25% levies on autos and parts. While it remains unclear if these carve-outs were included, Tokyo's willingness to move forward suggests some concessions were achieved. The Japanese automotive industry has signaled its commitment to the US market, with Isuzu Motors announcing a $280 million investment in South Carolina and Toyota pledging $88 million to boost hybrid production at its American plants. As the global trading system absorbs the shock of the US's aggressive trade reset, the Japan deal marks one of the most significant breakthroughs so far, a high-stakes agreement that may set the tone for upcoming talks with the European Union and China. And speaking of the EU, China and Japan, European leaders meet their Japanese and Chinese counterparts this week in a two-stop diplomatic tour of Asia. but expectations for the visits could hardly be more different. While Brussels is preparing to deepen defense and economic cooperation with Japan, its engagement with China is expected to yield little more than candid dialogue amid strained relations. European Commission President Ursula von der Leyen and European Council President Antonio Costa have their first stop in Tokyo to meet Japanese Prime Minister Shigeru Ishiba on Wednesday. today. There, the EU and Japan are expected to sign a raft of agreements covering defense industry cooperation, economic security, foreign interference, and industrial policy. Officials from both sides previewed initiatives including the creation of a so-called competitiveness alliance focused on critical minerals, batteries, and semiconductors. Japan and the EU will also finalize a framework for future cooperation involving their economic and foreign ministers. Von der Leyen underscored the urgency of the alliance in an interview with Japanese financial media outlet Nikkei Asia on Tuesday, citing growing global trade tensions and the need to shape fair rules on trade and technology. Quote, "For strategic partners like Europe and Japan, this means bringing our relationship even closer to meet the realities of our time," end quote, she said. A major component of the alliance involves jointly securing access to rare earths and other critical minerals, with Japan poised to invest in EU-led mining projects in regions such as Africa and Greenland. Regular viewers will know that China's control over rare earths has become a serious, not just industrial, but national security threat to the US, Japan, Europe, and others. Security ties are also tightening. Last month, the EU and Japan held their first security and defense dialogue, and the summit today will reaffirm their opposition to any unilateral changes to the status quo in the Taiwan Strait. Plans are underway for a new EU-Japan defense industrial dialogue to reduce dependence on US suppliers and foster joint equipment development. The contrast with Europe's approach to China is stark. On Thursday, tomorrow, von der Leyen and Costa will meet General Secretary Xi Jinping and Premier Li Qiang in Beijing. European officials downplayed expectations, describing the summit as an opportunity for, quote, "open, direct, good and constructive," end quote, talks, rather than one that would produce joint statements or substantive deals. Tensions between Brussels and Beijing have worsened in recent years over trade imbalances and China's support for Russia amid its war in Ukraine. The EU last week sanctioned 2 Chinese banks and 5 companies for aiding Moscow's military-industrial base, prompting a strong rebuke from Beijing. Despite that, China has publicly welcomed the summit, with a foreign ministry spokesperson calling for cooperation and multilateralism. Europe's frustration with China's economic practices is growing. China's trade surplus with the EU hit a record $143 billion in the first half of 2025, driven by rising exports and falling imports. April's export restrictions on rare earth magnets further rattled European industries, with von der Leyen accusing China of, quote, "weaponizing supply chains." End quote. We'll be following this EU-China summit very closely on my other channel, China Update. If you want to be on top of the most up-to-date analysis on the biggest developments in the most important global markets, consider subscribing to Market Update. Hit the bell notification icon and you will be. And if you're getting some value from today's episode, don't forget to hit the like button. Next up, we move to Asia. Malaysia is seeking to reduce US tariffs on its exports to around 20%, down from the 25% rate set to take effect on the 1st of August, but it remains unwilling to meet several of Washington's most controversial demands. Prime Minister Anwar Ibrahim's administration is negotiating with President Donald Trump's trade team in hopes of securing a deal similar to those struck with regional peers, Indonesia and Vietnam. While Malaysia has made progress addressing US concerns over the smuggling of advanced semiconductors, tightening export requirements, and increasing oversight, it has pushed back on American requests regarding electric vehicle tax breaks, foreign ownership limits, and fishing subsidies. At the heart of Malaysia's resistance is a desire to protect politically sensitive sectors. US demands for extended tax exemptions on American EVs have raised concerns in Kuala Lumpur about needing to offer the same benefits to other nations, potentially disrupting Malaysia's carefully balanced trade incentives. Meanwhile, pressure to loosen foreign ownership restrictions in the power and financial sectors, as well as to cut subsidies for ethnic Malay fishing communities, has touched on what officials consider red lines. Anwar said Monday that the government would not compromise on national policies, particularly those tied to the country's affirmative action programs for Malays and indigenous people. We note that, unlike many other countries in the West, for example, Malaysia's affirmative action policies benefit the majority population, the Malay. Trade Minister Aziz has expressed optimism that a deal can be reached, but has also warned of the risks of an uneven agreement. The administration remains wary of being forced into changes that could trigger domestic backlash or economic dislocation. The stakes are high. Malaysia has said its 2025 growth forecast, currently 4.5% to 5.5%, could be reversed downward depending on the final tariff outcome. The US had a $24.8 billion US dollar trade deficit with Malaysia last year, and Trump's new tariffs form part of a broader campaign to reset global trade terms. Negotiations remain fluid. Still, with time running short, both sides face growing pressure to strike a deal that balances trade access with political and economic realities. But frankly, if a deal is not reached, it will be Malaysia, not the US, that feels the majority of the pain. Okay, that is today's episode of Market Update. Thank you so much everybody for watching. Have a good Wednesday, and I will see you for another episode either tomorrow or on Friday.